All right, good morning, guys. This is the next lesson in accounting, following up from what we did last time, which was the 8-1, and that is where we closed out the temporary accounts and use the income summary to bring them all to a zero balance. So 8-2 is preparing a post-closing trial balance. This is what you need to look at before you actually start the next fiscal period. And it is the last step in the whole accounting cycle. So once you get done with this, we've covered everything that goes over being a service business, organized as a proprietorship, and running through everything that you'd have to do. So we are going to actually prepare a post-closing trial balance today. Okay, so, whoops. This is a picture of all the general ledger accounts after you've done your closing entry. So you'll notice like cash has a balance. So I'm looking at this. Here's cash, account number 110, and it has a debit balance of $25.97. And then petty cash, accounts receivable, they have balances. Here's more accounts receivable. Supplies has a balance of $90. Insurance does. Accounts payable, there's two accounts here. These are liabilities that we owe to people. We still owe the folks money that we did in the last period. So these are all permanent accounts. We don't close them out to a zero balance. Same thing with the capital account. Notice that it has a balance. But then we get into some of these temporary accounts like drawing right here. Notice that it's got the double lines across the debit and credit column. We use these to show that nothing's been omitted, but they actually have a zero balance. So these are the temporary accounts. Moving on, income summary. We had used that to transfer money back and forth from sales and all the expenses, and then finally moving it into capital. It has the double lines, and then all of your sales. These are temporary accounts as well. And then if you just go down the line, you've got your expenses and cash short and over. If you remember, that is considered an expense. So these all are expenses, and you'll notice they all have a zero balance because they are temporary accounts. So we do a trial balance after the closing entries are posted, and this is called a post-closing trial balance, and it talks about it on page 227 in your text. And you're just trying to verify that, all the debits and credits are still equal in the general ledger accounts. When we prepare the post-closing trial balance, we are only going to list accounts that have a balance. So your permanent accounts, your assets, liabilities, and owner's capital, they'll have balance, and they don't, they weren't closed out. So they're going to appear on the post-closing trial balance. And because the temporary accounts, your revenues, expenses, and drawing are closed, they're not going to appear. So this is what it looks like. So when you prepare your post-closing trial balance, there are steps. You put the heading in just like normal. You'll put the company name first. You'll say what the document is, as we always do. So this would be post-closing trial balance. Make sure you capitalize all those. And then you have your date. This is not for month ended January 31st. This is on the date of January 31st. So you don't have to put the for month ended. Then we're going to list out the account titles. You would get these from your general ledger. And you're only going to list out account titles that have a balance in them. So this includes our assets, which again, you can see cash, petty cash, accounts receivable, supplies, and prepaid insurance. Our liabilities, which is our two accounts payable in this instance, and then your capital. These all have balances remaining in the general ledger accounts. Next, you're going to put in their balances. Make sure that you put them in the correct column. So, our assets are going to have a debit balance. Your liabilities will have a credit, and capital has a credit. So you list those. Then we're going to add these up because, like I mentioned, you want to make sure that your debits and credits are equal. So you're going to do a thick bottom border here to indicate that single rule to say, hey, I'm going to add these up. So then you're going to compare the totals. In this case, debits and credits are equal. They're $4,237. If they were not equal, you'd want to go back and figure out, did I transpose a number somewhere in here? Did I miss a number? Did I not close something out right? just, try to figure out what you're off. And again, we always start with, you would take and subtract the difference between these two to see by how much you're off. That's always a good indicator of where to find the error. Remember, if it's divisible by 9, you probably transposed a number. If they are equal, you would go ahead and finish it off. You'd put totals here, and then you'd put your double rule down here. So you only want to put the double bottom border if they are in fact equal to one another. So if you were taking a test and you could not find where your error was and these two numbers were not the same, you do not want to put that double border. In fact, I would just type underneath here in text, say, I could not find the error, but they're not equal. I would need more time to figure that out, and you would lose less points off that. Okay, so this slide goes over accounting cycle for a service business, and there are 8 steps in the accounting activities in this cycle. So we're recording financial information for a fiscal period. In our cases, our fiscal period is always 1 month, and this is called the accounting cycle. You can see it on this next slide, or if you look in page 228 in your textbook, you can see it there as well. So I'm going to walk you through these steps. Okay, step 1 is analyzing transactions. That would be right here. This is where you have your source documents. You check them for accuracy and then analyze the transaction into debit and credit parts. So for instance, if you had a cash sale, you'd have like some sort of like a receipt, and you would say, okay, we would debit cash and credit sales. So that's where you just analyze the transactions. That's what we started out doing way back in September. The next step is journalizing your entries. This is where we're going to record the transactions from the information that you got on the source documents into your general journal. So you would have a double entry. You'd always list the debit first, then the credit. Make sure you indent the credit. You put the source document down and have the date. You also do the journal page number. Third step is posting. This is where you would post the entries from the general journal and post them to the general ledger. So this is where we're actually going to be able to keep a balance of cash or keep a balance of petty cash, or with your receivables, you'd be able to see who owes you how much money and when. Payables, that's who you would owe, and you'd be able to keep track of any adjustments to capital, like as far as like if there's a owner investment and things like that. Once you're done with your fiscal period, you move to the 4th step, which is right here. This is the worksheet. This is where you would prepare the worksheet with the heading correctly. You would include your trial balance, and you'd get all this information from the general ledger. The 5th step is to journalize and post adjusting entries. So from the worksheet, that's where you did your adjustments. So you could show what assets had to be converted to expenses because you used them during that time period. So you would journalize the adjusting entries and then post them to the general ledger. You then use that information to prepare your financial statements. We use this information to prepare both the income statement and also the balance sheet. So the income statement was, if you recall, that's where you'd have for month ended and then the last day of the month and the year. The balance sheet, however, is different, and that's where we just have a specific date and time when we look at your assets, liabilities, and owner's equity. Whereas the income statement is going to look at your sales revenue, any expenses you had, and then your net income or net loss. 7th step. This is what we did in section 8-1. We're going to journalize and post the closing entries. This is where we want to take our temporary accounts, which are sales, your expenses, drawing, and also the income summary, bring them back down to 0, and also post that overall change to capital. If you had a net income, it's going to increase your capital. If you had a net loss, you would decrease your capital. The 8th and final step is what we're doing now, and we're going to prepare the post-closing trial balance. And basically, we're just going to show which accounts have a balance in the general ledger. And that's going to include your assets, your liabilities, and your owner's equity in the form of your capital account. So After this chapter, you guys have completed the entire cycle of the keeping accounting records for a service business, specifically organized as a proprietorship. Now, I will tell you, if this had been organized as a partnership or a corporation, it wouldn't be that much different. It's the fact that it's a service business, and we're not having to keep track of like cost of goods sold. We don't have an inventory to keep track of, so that's what makes it different. It's specific for a service business. This is important, especially in the United States. You know, that's kind of the way of the future. A lot of businesses are service businesses, so you could find yourself working in a business like this someday down the road. Okay, auditing your understanding. These are the questions you need to go over. Why are lines drawn in both the balance debit and balance credit columns when an account has a zero balance? This is something that I gave you guys feedback on with your homework. A lot of you, you may have forgotten to put the lines through, or maybe you did it on some and not others. But the reason we do this is to assure that whoever's looking at that general ledger, when they see a blank space, they may wonder, like, okay, did they just forget to finish this? You know, you want to make sure that there's a balance that's not been omitted. So that's why we put those lines in there to indicate to whoever's viewing the document that this is in fact closed out, and because it was a temporary account. Number 2, which accounts go on the post-closing trial balance? As I mentioned, it's only those that have a balance. So we know that accounts with balances are called permanent accounts. And again, assets, liabilities, and your capital. So you won't have sales, you won't have any expenses, you won't have drawing, and you definitely won't have income summary. 3, why are temporary accounts omitted from a post-closing trial balance? I'll just answer that with number 2. They don't have a balance. They're closed. So they'll start to have activity again in the next fiscal period or the next month. But you want to have them as zero, because we always want to be able to say, okay, if I had $5,000 worth of sales and it cost me $3,000, I know that that's how much money I had to spend to get that amount of sales. And you want to kind of look at a trend to see, am I having to spend more or less with my sales? You might have problems with theft or just waste. You always want to be as efficient as possible, and these numbers will tell you that. So you always have to start over month to month with the temporary accounts. And number 4, what are the steps in the accounting cycle? Again, you can find this information on page 228 in your textbook. It is shown graphically with those pictures, and it also lists it out in a little red box. But just going down 1 through 8, it's analyze the transactions, journalize them to a general journal, post to a general ledger, prepare the worksheet, journalize and post your adjusting entries, use the worksheet to prepare your financial statements, journalize and post your closing entries, and then prepare your post-closing trial balance. So again, for our purposes for this chapter, we are on steps 7 and 8. Step 7 was in section 8-1, and this last step 8 is in section 8-2. All right, so that's it for the notes. I am going to go over the work together problem and post that as well. So when you do the on your own this week, you'll be able to see the steps and how I created that. Thanks.